If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back everyone to another Quant update. If you remember at the beginning of the week, we were essentially calling for a bullish dump. And over the past couple of days, we've dumped back down to where we need to be, which was this $5 area of support between 103 and $108. $5 key range of support. It was once previously resistance, where we saw a double top forming, validating and invalidating itself once it reclaimed this golden line over here. Once we confirmed that support, you then formed a double bottom, actually an even larger one, and we went through this yesterday, so if you're not aware of it, then go back to yesterday's video. And essentially, after this double bottom breakout, you're not only validating the pattern itself and expecting the target, which was of course actually met in the past few days. However, what we're also looking at in this area is the golden pocket. This is a point where we're actually meant to get a rejection and a new low from. We had multiple chances of doing so, but we couldn't put in that new low. So we put in the higher low after losing the neckline, reclaiming it, confirming its support. That's your higher low. You're meant to put in a lower low. We put in the higher low, confirming this 0.5 Fibonacci as support. And so essentially you're going to be targeting these Fibonacci's. But we also use shorter time frame fibs. Those were maybe from the weekly time frame, but now we're on the daily. We can see I'd go from here to there, showing me this golden pocket, which was also the neckline of this double bottom, and we broke out and we're just coming back to retest that neckline. So as long as this low can hold 103, this $5 range, 103 to 108, then we should look for this continuation to 125. That's the target, or that's the title of today's update. So that's what we're expecting going forward, as long as this level is being maintained. And the signal that we also need to see, which was the title of yesterday's update, is this golden cross, because this is giving more validity to this breakout that we've seen in the past few days, where we peaked out at $120, $121. So to continue with this uptrend, this golden cross must form. This is what we've seen across other alts, just like H-bar down over here. In fact, I've predicted this whole entire move and been calling for it daily ever since October time, when we first saw this daily bullish cross. Then we broke through the 200 EMA, the golden cross formed, and we just continue with higher highs and higher lows, and that's why we're getting this continuation. There's previous examples where the golden one didn't actually cross over. We broke out. That's extremely bullish, but we need to see this crossover. If it doesn't come, you see what happens next. So that's why it's vital for Quant to essentially see that as well. Another example, I've been calling for VeChain to retrace all the way back up to this high since the same day as H-bar, pretty much the end of October, and now this is 80% up. Check out those videos. I do daily analysis on them as well. And as you can see, the golden cross had formed, and because of that, we just created a higher low and then continued with the uptrend. Whereas previously we broke through the 200 EMA, but failed to get the crossover right over here between the 200 and the 55. That's what we needed to see. You would have fallen back to it as support and then continued. But as they never crossed over, this is called an EMA repel, and you get, as you can see, shot straight back down. So it's very important for Quant to see this bullish signal. Otherwise, you know what's next. I've just shown you. So we need to see this golden cross form. That's on the 0.5 Fibonacci at $103. And that's essentially why in these past few updates, I've been suggesting that 103 needs to hold going forward for the continuation to our technical target. Now, I have been saying $130, correct, in the past few updates, but I've forgotten where I had my most recent fib, annoyingly, but we had some confluence in and around the 125 area and 130 area. So I was originally calling 130, but as you can see, there's a lot of resistance, maybe a little bit before that technical target. So it's going to be this $5 range between 125 and 130 over here that we're looking for. Okay, $6 range, but let's just use 130 as a psychological level. So between 125 and 130 is going to be a key level of resistance going forward that we must face and break through eventually. Just like we broke through the 0.5 Fibonacci here, we've confirmed it as support over the past few months, consolidating. Again, we were hoping for this $94 wick back from the end of last year to consistently hold. We held it over here, reclaimed the 0.5, and that's how we started this initial move up, also validating the double bottom and breaking the golden pocket to create the reversal wave. You're just simply coming back down for a bullish retest of key levels of support, looking for the continuation. We met the 618, so as long as this can now hold, we're looking for the next one to be met at $127, but just slightly before that point, we've got a 1618 and a 1272 at 125. So that is my specific reasoning for why the title is 125 and no longer 130, because I know that this could be a level. Yeah, we might wick through it, but at that point we could get a rejection again and start dumping, just as we've seen off of the 618. So the expectation is we come up into that area and get rejected again, maybe falling back to where the bodies had closed as resistance, but now a support, looking for further continuation up. But we'll play it move by move. There's no point of getting super excited and talking about like $400 right now, but of course there are some early signs that that could be a possibility. Now we're going to end off this video by going to the 4-hour time frame, looking at this a little bit clearer. I've been going absolutely crazy in the Discord community, posting multiple updates today, and we had a nice successful group call last night where we did some mentorship, just teaching people the exact strategy that I use to analyze these charts daily for you guys, and so they can go ahead and profit by themselves. And if that's of interest, then just use the links down below, and there'll be a little clip at the end of this video. Now, I like what I'm seeing over here on the 4-hour time frame. We know that this dump was to test the golden pocket as support as the reversal wave was created. So to allow those higher price targets to eventually get met, you need to maintain above that point. Now, it's a little bit different on the 4-hour. The moving averages, the 200 EMA is already above the 103 location. So it's nice to see, because we consider this the bottom of our uptrend. And so while we are still holding this as support, we're expecting an eventual break of this high. And I've already given you those targets on when we were analyzing on the daily time frame. When we scale down, it's just to further prove to you guys why I have that initial bias from the higher time frames. And when we go scaling down to the lower time frames, we're just going to redo the analysis. There's more candles to work with, and we might spot some more patterns that might make those specific targets on the higher time frames more understandable, because there might be patterns with technical targets as well as our Fibonacci. So that will be like a further confluence, a further confirmation of our bias. So what I'm seeing and what I'm liking, first of all, the 200 EMA is above the 0.5, amazing. We know that that's where it's sitting on the daily time frame. So it's actually quite nice to see that they're very close to each other on the 4-hour and daily, because usually they're very different when you switch the time frame. Now, we have lost the 20 and the 55 over the past few days, but we knew what the reasoning was to reset this uptrend by coming down to 200 EMA, but also confirming the reversal wave. Remember guys, this purple box is a point where we're meant to put in new lows. We're meant to go lower from here, and the fact that we broke through is extremely bullish. So we just need to confirm what was once our top now as our bottom, and we've already got a nice little pump off of the 200 EMA as well today. So going forward, what now needs to be seen is a reclaim of the 20 moving average, simply because on this dump we actually never got a bearish cross, and this pump right now being very aggressive is a good sign, because what is trying to be formed over here is an EMA repel. And now that's exactly what we saw on H-bar and V-chain on those initial breakouts, but it's a little bit different over here because we're not focusing on the 255 now, we're focused on the 20 and the 55, and we need to see a bearish cross for continuation lower. If that never comes, this is called an EMA repel, and an EMA repel is when they're about to cross but they don't. And these moving averages are bullish as of now. They haven't formed a bearish cross. So if we do an EMA repel where they don't actually cross over, the moving averages will do something like this and hold the uptrend. And so the only way in doing so is by seeing price reclaiming it, confirming it as support, and getting that continuation. So that's why right now I like the pump up, because if we had formed the bearish cross and we're pumping into it, then I'd probably say it's a likely point of rejection for continuation lower. But as there's no bearish cross, we've just come down, reset the uptrend. There's no bearish cross. Let's just now reclaim the 20 and get this continuation to our $125 technical target. And let's just further confirm this with some more Fibonacci's going off of this top to this bottom, we can now see that once we break through this key level of resistance over here, that our targets will be between $125 and $131, just acting as further confidence for what we were already saying on the higher time frames. Thank you so much for tuning in. Don't forget to like, subscribe, comment, and share. If you want to learn how you can do this all by yourself so you can profit off of the markets, then just private message me. The links are down below. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.